This is the mortgage housing update as of April 21st, 2026, and let's go through the rates. So according to Freddie Mac, we are hovering around 6.30 for your 30-year conventional conforming loans. Very similar on Mortgage News Daily from yesterday, 6.30 for your 30-year conventional versus FHA 5.88. So that means that if your loan amount is $500,000, you're looking at your principal and interest of $3,095 with conventional or $2,959 for your FHA. Okay, today we're receiving pending home sales later on around 10 a.m. And on Thursday, we're going to receive jobless claims, right? This will move the rates higher or lower depending on the new data that comes out. And we have Fed meeting on in about 6 days, but we really don't think that the Fed is going to cut any rates because of the last data that we received for inflation, which is at 3.3, much higher from February, 2.4 to 3.3. In order for them to bring this down, they would have to hold steady for now, okay? And Trump expects U.S. to make a great deal with Iran. We really hope so, right? Before we went into the war with them, the rates were hovering around 5.99 or a little bit below. And since then, we have seen it over 6%, 6.5 as well. And now they're coming down to 6.3, okay? Shares of first-time home buyers is pretty low. This is on 21%. We were at some point at 50%. Now we're at 21%. And we highly encourage our first-time home buyers to check out both loan programs. Check out your FHA. This is a great loan program when your credit scores are on the lower end, below 620, but higher than 680. But you know, it is going to cost you a little bit more because there's an upfront cost of 1.75%, and your mortgage insurance doesn't go away if you were to put down 3.5% there. Okay, and you must live there. Also, if you're a first-time home buyer, you still can go with conventional loan and put down 5% down payment with conventional, right? But you do need credit scores of 620 or more. And the last thing is that let's say you have a husband and a wife making $60,000 as husband, wife is making $50,000, and there's no debt, right? There's no car payments, no student loans or anything like that. And they have about $50,000 for their down payment and property taxes around $7,000 and home insurance for the year around $1,500. So this family can purchase a house around $594,000 if they want their DTI to be 49%. If they really want to be comfortable, they should be purchasing a house around $515,000, okay? But your debt matters a lot. If this family has a $500 car payment, right, this will drop their affordability versus if they purchase a house where their property taxes are $10,000 instead of your $7,000, it drops to $486,000. So as you can see, there are many factors when it comes to affordability. If you have any questions, please get in touch.